The Bank of Japan's new governor, Haruhiko Kuroda, didn't take long to show his dovish tendencies as the central bank today announced $520 billion in new government bond purchases over the next year. Here to talk to us today about it from the NASDAQ is Nick Colas, Chief Market Strategist of ConvergEx. Nick, thanks for being with us.
Thank you.
So, we're wondering, what does the BOJ's latest monetary policy announcement mean for the markets?
Well, it's an incredibly dramatic step the BOJ has taken. The amount of quantitative easing they're engaging in is roughly 10% of GDP for that country, and it's a big economy. So what they're really signaling is they're very serious about trying to bring the country out of its 20 years worth of deflation and very slow economic growth. If they're successful, it's very positive for the global economy and for global markets. And frankly, if they're not successful, you basically have to throw the whole playbook out the window and try again, because this is a very, very dramatic step.
Well, we also saw that the Bank of England and the European Central Bank chose to stand pat on their monetary policy announcements today. Economic activity in the UK and Europe is pretty flat or on the decline, and we're wondering, are they going to do anything about it anytime soon?
Yeah, that's a perplexing move. I agree with you. You would think that given the problems in Cyprus, both of those organizations would have been a little easier on interest rates. What appears to be happening is both of them are standing pat, looking to see how weak the European economy gets because of Cyprus, and then move from that point. But it's disappointing they didn't move earlier, for sure.
So a combination of action in Japan and maybe a little bit of inaction in Europe and the Bank of England on a whole, what should investors be looking at moving forward on these announcements?
Yeah, the bottom line here is still very much the same as it has been for many, many months. Central banks around the world are still very interested in pumping liquidity into the financial system. The BOJ is just the latest party. Obviously, the Fed's been doing it for a while. And the bottom line there is very simple. As long as central banks have our back, risk assets like stocks should continue to rise. So I'm still bullish.
A lot of U.S. investors are wondering, what does Europe and Japan mean to us? How do you think they should be playing these announcements?
Well, the bottom line there is a little more complex. You can, for example, buy Japan through a whole variety of ETFs. But if you want to play things closer to home, the real situation is the economy around the world is still very sluggish. And it's tough to be a stock market investor when you get disappointing economic reports like the one we got this morning with initial claims. The offset is central banks are still committed to pumping liquidity into the system, and so as difficult as it is to be bullish, there's still a strong bullish argument to be made, and that's really what people need to anchor around.
Nick, thank you so much for being with us.
Thank you.
Though the Bank of Japan continues its easing as most of Europe stands pat, there's still a way for U.S. investors to play it. I'm Deaux, The Street.